We're joined by Mike Clare, Senior Vice President and Senior Portfolio Manager at Brompton Funds. Mike, great to see you.
Great to see you as well.
Start off by talking about these earnings from TMX Group, please. That stock, of course, has been hitting record highs lately.
Yeah, so it's been TMX Group, obviously, which owns the Toronto Stock Exchange, the Montreal Derivatives Exchange, and some other businesses, has been a strong performer. I think they showed pretty strong results this morning, especially on the top line. So revenue generally beat estimates across the board. And if you look at the different business lines, all businesses are performing well. But in particular, we've seen a lot of strength from their derivatives trading and clearing business, which is, and as well as equity trading as well, which is a theme. You know, it's consistent with some of the reporting we've seen from the U.S. banks as well as the Canadian banks, where equity and derivative trading has really been driving strong results for those banks. And now we see that show up in TMX results. So their derivatives trading and clearing business is actually growing at about 50% year over year.
Wow.
If you look at that business now, it's about an annual $400 million run rate annual revenue business, which is up 4 times over the past 10 years. So it's been a really strong growth area. Being driven by both, I think, secular and cyclical tailwinds at this time. So we've got, of course, the secular tailwind of increasing use of derivatives broadly by both institutional investors, whether we see it with ETFs that use derivatives as part of the strategy, as well as retail investors, where we've seen a pretty significant uptick in the use of derivatives and options broadly, particularly in the post-COVID era.
The stock down a bit. It hit a record high last week on Friday. And you say the valuation is full but fair.
Full but fair. So it trades at about 28 times earnings, which is a premium valuation. It trades at a little bit of a premium to some of its U.S. peers. If there's one negative I could point to in the quarter is that the expenses were a little bit higher than expected, about 10% above what consensus was calling for. And so that means that the strong revenue result sort of drove an inline earnings result. And I think there's a little bit of concern out there on those expense numbers. I think we did see some probably one-time items in the quarter, and I would, as an investor, long-term investor, probably look past that and look to the strength of the underlying businesses and view any sort of pullback here as an opportunity to pick up shares.
Brookfield Asset Management reported this is not a stock in the Brompton Funds portfolios. Is it just a valuation?
Well, it's partly a valuation. So we do like Brookfield Corp rather than Brookfield Asset Management. So, of course, Brookfield Asset Management is the pure play private equity, private credit, alternative asset manager that was spun out of Brookfield Corp in 2022. Brookfield Corp, of course, still owns about 3/4 of the shares. The other 25% is a free float to investors. So we do like the business. It's growing quite substantially. They're in the right segments of the market in terms of things like infrastructure investing, energy transition, renewable power investing, private credit. They've been gathering insurance assets, whether it's from Brookfield's own captive insurance company or third parties. And so they're roughly on track. They've got a plan to essentially double assets under management, fee-bearing capital, they refer to it as, over the next 5 years, which would drive pretty substantial fee-related earnings growth. And then, of course, get operating leverage with that as well. You can manage more money with the same number of people. And that really drives what we think will be significant growth in the bottom line. If I could point to one, I won't call it a negative, but the valuation is a premium. It trades at about 30 times earnings, which is the reason we don't own it in our funds. But we do like Brookfield Corp, which gets you exposure to the asset manager as well as a number of other businesses, and that trades at more like 15 times earnings. So I view that as a discounted way to play the asset manager, as well as you get the benefits of the insurance business and some other components of the whole Brookfield ecosystem.
I see since BAM started trading in 2022, it has been pretty steadily increasing the dividend, the yield north of 3% now.
Yeah, and that's been one of their strategies, is to continue to grow that dividend. They have a pretty stable earnings base. Most of their revenues come from fees rather than things like performance fees and carried interests, especially on some of the legacy assets they manage, where some of those carried interests were retained within Brookfield Corp. So they've got a very predictable earnings stream. As long as they continue to raise assets, third-party assets, and grow that fee-bearing capital base, they'll be able to continue to grow earnings and grow that dividend over the coming years.
Just broadening things out to the market itself, we've heard about this flight from the US, and the Trump administration has been accused of authoritarian tactics, threatening law firms, universities, etc.
Right.
Do you think we will see less willingness to own US assets for the next while?
I think to a certain extent, yes, and to a certain extent, no. And so where I'm in the no camp is that the U.S. is still really the only place to be if you're bullish on large cap tech, which we are. And so you're gonna continue to see flows into, the Magnificent Seven and other large cap tech names. Mm-hmm. I think on the negative side is we have seen a number of those flows over the past decade. And so we are seeing, to a certain extent, a little bit of an unwind with some of those flows coming out of the U.S. and perhaps into Europe, where there's more value, or other parts of the world. And so there's a little bit mixed in terms of the outlook there.
Mike, we better leave it there. Thank you very much for joining us this morning.
Thank you.
Mike Clare has been our guest, Senior VP and Senior Portfolio Manager at Brompton Funds.